This is the Play Inspired Podcast, episode number 94. Hey, what is going on, everyone? And welcome to episode 94 of the Play Inspired Podcast. And in this episode, we hang out with the amazing LuSundra Everett. My goodness, okay? When I first met LuSundra, I met LuSundra through the internet about almost a year ago now, really, and we met in person for the first time in Arizona last April, and it was amazing. It was almost like an instant connection, and she has this personality that she's approachable, like she's instantly your friend. And you know what? When we met, her family, her beautiful family, made such an impression on me. Right? Like her beautiful family made such an impression on me. She's got the most politest children. Her son, her daughter, I don't know. I have no words for it, but good job, LuSundra and her husband. Good job. They did such a great job on those kids. They're like so polite in a way that, hey, I was introduced and her son was like, "Hello, ma'am. Like, pleasure to meet you." And I was like, my goodness, I haven't met a teenager like that in a long ass time. And anyway, LuSundra's expertise really is home business taxes. Okay, there's a lot of questions surrounding this. There's a lot of questions surrounding this, right? Like, it's not the same as your regular taxes when you're employed, right? Like when you're working for someone else, it's not the same, right? And that's where she comes in. She's so willing to help, and she's so knowledgeable about this that I thought, hey, why not bring her over to podcast and answer all our taxes, questions about taxes, not make her taxes, but like to answer all our questions about taxes and such. And you know what? She agreed right away, and she's like amazing, and she's so helpful, and you know what? She's just there. You know that she's serving from the heart, and that's really the theme here at the Play Inspired Podcast, is to bring people in that are serving from the heart, that really has everyone's best interest at heart, and that's exactly what LuSundra shows in her business. That's how she serves in her business. So guys, I'm not gonna delay this any further, but first things first, don't forget to join the private Play Inspired Podcast Mastermind. In there, you know, I try to give out the best training I can. We host master classes almost every week. Don't forget to join. It's head over to judithvergara.com/groups, right? Or just go to Facebook really and search #Play Inspired. Right? So again, actually that's judithvergara.com/mastermind, not group, mastermind. Okay. Sorry, head over to judithvergara.com/mastermind. That's also linked up in the show notes page, along with where you can connect with LuSundra. So guys, I'm not going to delay this any further. I present to you my good friend, the one and only LuSundra Everett, the home biz tax lady. All right, welcome everyone to the Play Inspired Podcast, and we have the one and only home biz tax lady with us today, LuSundra Everett. Now, LuSundra, I'm not going to delay this any further. We've got some burning hot tax questions for you. Now, give us a little bit of an intro. You know, like explain what the home biz tax lady is to us.
Oh, okay. So again, my name is LuSundra Everett, and I come from the home business arena. So I started out in the network marketing industry and went through, and just like everybody else has been in the network marketing industry, I've done lots of stuff. So, but what that did is gave me a unique skill set to really be able to benefit my community. And so, you know, taxes is something that that I was always interested in, but never, I was always in the wrong place at the wrong time. And so finally the opportunity came for me to be able to take a tax class, because I had this one CPA. He was like, "Oh, you're just doing everything wrong and wrong." But he never told me exactly what I was doing wrong. So that is what piqued the interest. And so when I got the opportunity, I took that opportunity. And then, through random conversation with one of my fabulous mentors, Ms. Keisha Bass, she's like, you should be the home biz tax lady. I was like, yeah, I should. Shouldn't I? So, but, so that's how the name came about. But it's really because, in our home business industry, whether it's through network marketing, affiliate marketing, whatever, there's lots of people that are telling you how to make money online, how to get more leads, more sales, but nobody's telling you on the back end what to expect come tax time. And so that is the space that I chose to fill, because we have a lot of home business owners getting into tax trouble. They have that one boss out year, right? Like, oh my gosh, I made 6 figures and didn't save any of that for taxes. I'm like, oh my God, now I owe the IRS. So that is why I'm here. That is my mission. And yeah, that's pretty much how I got here.
Yeah, that's one of the most common things that I see around, like, oh, I just made a killing. I knocked out $50,000 on my home business last year and I blew it all away. So how much should they be saving for taxes and contributions, taxes, pensions, and all that good stuff? How much should they be putting aside?
Okay, so that's a really good question. So for taxes, it should be 30%. Okay. And I usually get people that pass out at that 30% amount because they're like, oh my gosh, that's a lot of money. Well, yeah. But when you had a job, you were taking out 30% was taken out for you. So you didn't have a choice. But at least at this point, you set aside 30% so that you can put that in a money market account, gain some interest, whatever, keep it liquid for tax time. Because what happens is that once your personal tax liability reaches $1,000, which, most of our home business owners are sole proprietors or single member LLCs. And so this all on your personal return. There's no business taxes, right? The separate entity. But once you have those estimated tax payments, once that kicks in, the first 6 months of the year is your check writingest time for taxes, because you have your Q4 estimated tax payments that's due in January. You have your annual tax liability that's due on tax day in April. You also have your first quarter estimated tax payment that's due on the same day in April. And then 2 months later, you got your second quarter estimated tax payments that's due in June. So the first 6 months, you're writing about 4 or 5 checks to the government. And so by having that 30%, you're creating an account for you to be able to write those checks. And that's just on the federal level. If you've got a state, 43 states have income tax. So you got the same thing for the state as well. You have estimated tax payments for your state. You also have different types of filing fees for your state. Some states have, and localities have, business privilege taxes that you have to pay. And it's not based on the amount that you earn. It's, hey, you made this amount of money and this is what you pay us for the privilege of doing business in our state or our city. So setting aside that 30% allows you to have that buffer and that, building up those savings. So when it's time to write the check, you can just write the check and keep it moving instead of trying to figure out how in the world you're going to pay it and then having to deal with the government on that end.
Right. So another thing is, come tax season, right? Like the refunds and all that stuff. Now we get refunds because how does that work? Like, do we get refunds because our employers already paid part of that? So now that we're self-employed, could we just like write off everything and still get a refund, or not quite because we didn't really pay anything yet?
Well, it's, there's a few things that are working, in that. So the one thing that's not going to go away is self-employment tax. Okay. And so now if you have tax credits that kind of eat away at that, then that works out in your favor. But by and large, business owners pay taxes. And the only way that you get a refund is if you overpay. Okay. And that's the part that people don't quite understand. So even with your W-2 job, if you've had more taxes taken out and you've got tax credits and all of that stuff based on, how many children you have, how old they are, all those different types of tax credits. And so then you wind up with this overpayment. And so that's when a refund happens. But as business owners, unless you overpay your taxes, then, you're not going to get a refund. And so this is why I really try to stress to get in the mindset of, you really need to get out of the mindset of refunds, because refunds means that you overpaid. And as a business owner, number one, that's not something you want to do. And number two, that's not something that you're generally going to do, right? So the way that happens is, let's say you have estimated tax payments based on a certain amount of income, but your income goes down. Well, if you've made your estimated tax payments on time, and then based on that, what your income is for that year, then you suddenly don't owe that anymore. Then that's when you'll get a refund to say, okay, yeah, you overpaid. Yeah. So I hope I explained that clearly.
Yeah. Yeah. So yeah, it's a common misconception. Oh, don't worry about it. I'll get a refund. But this is what I was thinking of. I was like, well, if you didn't pay anything, then what would they refund you, right? So
exactly.
Okay. Yeah.
So it's only if you overpay.
Yeah. Only if you overpay. Yeah. So now, when does it become beneficial to, go from like self-employed to, when does it become beneficial for tax purposes, right? To go to incorporate your business, like go for an LLC or etc. Something that, when does it become beneficial to do that?
Okay. So one common misconception is that an LLC provides tax benefits. It does not. Okay. If anything, an LLC is going to cost you more money than it does provide in tax benefits. An LLC provides you the liability protection. It allows that separation, giving your business its own identity versus as a sole proprietor. You, the person, are the business. When you die, your business dies. Okay, that's the difference. Now, people, ask me like, well, should I be an S Corp? Should I be a C Corp? All that. When you start making about $200,000 ish, that's when you really need to be looking at if you need to change your structure. One of the things that we had with the tax reform is this big rush into people like, oh my gosh, I need to become a C Corp because they, lower the tax rate to a flat 21%. I'm saying, excuse me, you need to know your effective tax rate as it is, because 9 times out of 10, you're not paying 21%. Right. So, and there's all other, sorts of, state and federal regulations that go with these, with the S Corps and partnerships and C corporations that, you need to weigh all of that out. And if you don't have someone helping you with your bookkeeping and with the compliance, you wind up in more trouble than you do than anything else. So I'm like, just please slow that roll.
Yeah. So would it be highly recommended, to hire a professional, get a bookkeeper that actually understands like what you could write off and what you can't, and instead of you just trying to make like this convoluted Excel sheet at the end of
Absolutely. Yeah. And I tell people, bookkeeping over structure, bookkeeping over all else. And the reason is that it doesn't matter the structure that you have. If you got jacked up books, that business structure is not going to protect you for any liability at all. Because if you're not operating your business properly financially, it takes away all of your liability that this business structure is supposed to provide for you. If you're still commingling funds, if you're still paying for personal stuff with business money, business stuff with personal money, if you're still doing that, you allow what's called piercing the corporate veil. And so what that means is if somebody sues you, then that liability protection that you had with your LLC to separate your personal assets from your business assets, that's gone. So if you're commingling funds, even though you have an LLC or a corporation, they can still attach your personal assets because you're commingling the money. So that's why it's so important to hire a bookkeeper to help you keep track of what's your business expenses, what's your personal expenses, so that you can really have that separation and know if you're making money, right? Especially when you have, a job and you're working on your business, you're using your job to fund your business, but you're really not looking to see if you're making money. So yes, when you first getting started out, you have simple bookkeeping. Get some bookkeeping software. I always recommend QuickBooks Self-Employed, because every accountant, bookkeeper, CPA I know knows QuickBooks. Okay. There's other stuff out there though. There's lots of accounting systems out there, but the main thing is to use something so that you can track your income and expenses.
Yeah, that's amazing. Now, sorry, let's circle back a little bit on, you said self-employed tax is a constant, right?
Mhm.
So how does that work? So say you have a certain percentage of self-employed tax.
Mhm.
But you wrote stuff off. Is it okay? Would that count against that, or that's a constant, you have to pay it either way?
It is in the US, it's 15.3%, and it's based on your profit. Okay. So you have your income. So let's say you have $55,000 in income and you have 30,000 worth of expenses. Okay. So that's 25,000 in profit that you would pay your self-employment tax on.
Okay, so it'll never be like, unless you break even, like,
Right.
yeah, then you will be paying like a little something. It will never
Yes.
be zero.
It will never zero out unless there's other things like a loss carryover or something like that. But generally, yeah, thou shalt pay.
Thou shalt pay. I like that. So
And that's what I'm saying too, is like, some of the states, like I want to say New York is one of the states that charges their tax based on your gross receipts and not your profit. So where you are paying whatever that is, for 25,000 for your income tax, you're also going to have to pay for your gross receipts tax. So this is why, when you start hearing all these taxes you got to pay,
yeah,
30% starts to make a little bit more sense.
yeah, but usually that 30% that you put away usually is a safe number.
Yeah, it generally is a safe number, because if you're consistently doing that, even if, let's say you wind up with a shortfall, let's say you figure out, okay, 30% wasn't enough. You went and bossed out somewhere and you made $500,000 and you just didn't see that coming. I don't know how you don't see $500,000 coming, but okay, whatever. Right. But at least if you set that money aside, you're not completely just caught off guard. Right. Because the thing about the government is this, as long as you keep in touch with the government, even if you can't pay your entire tax bill, they'll work with you. That's the one thing that people have to understand. But if you don't contact them, that's when you force them to enforce the law. So as long as you're working, trying to pay off whatever that shortfall is, they're willing to work with you. Now, states will come for you faster than the federal government. So do not play with your state. I'm telling you, okay? New York, California, Massachusetts, I do believe are the top 3 that come with shark-like, Jurassic Park-like teeth.
Yeah.
Yes.
Now, so one thing that was mentioned to me, I ran into I'm in Canada,
Yeah.
right? So I ran into an American friend of mine about a couple of years ago. She mentioned that if you're American and you're working on Canada, in the Philippines, in Japan, wherever, you still got to pay a certain percentage of your taxes to the USA.
Yes.
Yeah.
Yes, it's called. Now you will get credit for the taxes that you pay for in other foreign areas. So, like you said, if you are working in Japan, like for your job, okay. So there are a lot of different moving parts that come with that. But if you pay taxes to the Japanese government, then you will get credit for that. But you may also have taxes to pay here in the US as well. So when it comes down to foreign income, that can get really complicated, and you really need to work with someone that deals with foreign tax accounting, because yeah, that's why Paul Manafort's in all kind of trouble in the US, you know.
Yeah. So say I'm from New York,
Mm-hmm.
but I decided to move to the Philippines, right?
Mm-hmm.
So would my business still be considered as something that's functioning in the USA, or it's now a foreign
It depends on your citizenship. Now, if you move to the Philippines and you give up your U.S. citizenship, you ain't coming back except to visit. But, you know, you take up residency in the Philippines and you are, a Filipino resident free and clear, but you do business in the United States. So your income tax would go to the Philippines, but you would still have tax to pay in the U.S. But it would be on a foreign tax, not on your business, not not as a citizen. And so you would have to then register a business. You would have to register as a foreign entity, and then you would have to pay taxes based on that. I hope that makes sense.
Yeah, makes sense. So when you say doing business in the United States, like say I'm in Canada,
Mm-hmm.
and someone bought from me who's in the United States, then
Mm-hmm.
would that be considered as a transaction made in the United States then? Or
Okay, so for income tax, you would pay Canada for that, but with sales tax, that could be a little bit interesting, because there is just the recent ruling with Wayfair versus North Dakota, where states are requiring people who sell to people in a particular state, whether you're doing business in that state or you sell to someone in another state, to collect and remit sales tax. And so I know, for instance, Australia is requiring foreign people selling to people in Australia to collect sales tax on certain products. So you have to know, like if you're selling digital products, there are only certain states that require sales tax on digital products. So you have to know, like, if does this state does this state tax digital products, and do I have to send them sales tax? So I highly recommend someone who is selling digital products, and especially physical products, to get a service like TaxJar or Avalara to help with that, because that's not something that you can really manage on your own. It's too much.
yeah, it gets a bit complicated, hey, when there's like 50 different states, and I think there's like a few other provinces in Canada, then it gets a little blurry which is which.
It really is. And the fact that you can get there, everybody's requirements are different. So there are some that's, if you owe between $0 and $100, then you can pay your sales tax annually. But if you owe more than $100 sales tax, then you have to file like monthly. So yeah, that's why I say get a service, invest in the money to get a service, and focus on making that money to pay the service to help you leverage that, and and stay out of trouble with these states and getting tax bills saying you owe us.
This reminds me, one of the lessons that was imparted to us today in the virtual summit that you and I are in is to, if you don't know how to do it, then go get a service that knows how to do it. So that pretty much sums it up. Don't try to spend the whole weekend trying to figure it out.
Yeah, you have to know what your time is worth. And I actually had a conversation with the business owner today about that. She's like, I was doing my own taxes, and then I would hit a snag, and I would go spend this time trying to, research this. I was like, listen, boo. I said, by that time, you could have hired me. You could have went and made that couple $100 back and been on about your business. As a business owner, like, I understand in the beginning we're bootstrapping, okay? Been there, done that, okay? But you have to understand the value of your time, and that your goal should be to hand this off to people whose job it is to know bookkeeping, to know tax law, to know business law, all of that stuff. And then you focus on generating the revenue to pay those people to help your business grow.
Yeah, yeah, absolutely. Yeah, that's something I needed to hear. I've been over the last couple of days. I've been like, should I pay for FreshBooks? Oh, I don't know, maybe. But now I'm like, now it's a resounding yes.
Yes, yes, yes,
Yeah.
yes, 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 you should. Yes, you better do it. No, because here's the thing: when you establish these foundations in the beginning, the deeper the foundation, the higher you can go. So when you start out now with using accounting services and using accounting software to build your business, as you grow, you've already got that foundation in place, and you're not trying to figure out, where's this money coming from? Where's this money going? How do I manage all this? You're starting out with stuff, with money that is small enough for you to sit there and look at the numbers and say, okay, there's something wrong here. It doesn't make sense. So that when you're making 6 and 7 figures, your system is already figured out, and you can just go on about your business and say, here, you handle this. I'm going to go over here and sit my task.
Yeah, that's good. That's good. Now, before we hopped on in here a couple hours ago, I was doing some research, right? And one of the most common question I saw was, when is self-employment tax due?
Tax day.
Tax day. So it's it's the same as like regular income tax, except
Right.
two different forms. But
Right.
it's the same.
It's the same. And when that number is over $1,000, that's when you have estimated tax payments.
Yeah. So what do you find is the most common misconception when it comes to home business taxes?
Not reporting income.
Really?
Really. So here's the thing. PayPal, Stripe, all those payment processors, they have a requirement to report your income, $20,000 and 200 transactions. Okay. And other than that, they don't report. But people feel like they don't have to report the income, and that's not true. So, just as an example, I had a consult with someone who was driving for Uber and Lyft. Okay, didn't report $20,000 worth of income. Okay, because he felt like the government wouldn't know. Well, guess what? The government knows. So, and I do believe it's Massachusetts and Vermont just changed their laws requiring those payment processors to report at $600 or more, just like with the 1099 miscellaneous. So you've got 1099 reporting for anything over $600 that gets sent to the IRS. It's the part that people miss, is that whatever tax forms you get in the mail or you get via email, they also go to the IRS. So they're just waiting for you to report your income. And it's automated reporting. So they basically get a blip on the screen that says, hey, we paid LuSundra $1,000. And so they're waiting for LuSundra to report on this $1,000. Okay. She hasn't done that. So we'll send her a nice tax bill to say, hey, boo, you owe us. Thank you. And we want our money now.
Yeah.
But it's underreporting the income. And that is one of the absolute worst things that you can do.
Yeah. What's a question that you wish more people ask?
How much are your services? Because, and the reason I say that is because people don't believe that they need to consult tax people. I've had people like, well, so-and-so said this and so said that. Okay, well, just because a seven-figure earner said it doesn't mean it's right. So instead of investing in the consult, they get they get the street committee tax advice. They get their advice from Facebook, Google, and YouTube, all of which are the wrong places, because even though there's good tax advice out there, the fact is that taxes are an individual thing. So you have to, a tax person has to be able to see your whole picture. Like, I do Facebook Live broadcasts Monday through Friday, and they all go up on YouTube. But I also remind people, like, this is not complete tax advice. This is answering a specific question, but it doesn't mean that it doesn't affect another part of your life. So I really wish more people would really take the time to invest in a tax professional or a CPA. And most people don't do it because they feel like, oh, I can't afford it. But the truth is that if you go to a CPA or a tax person and be like, look, I'm just getting started in business, I need to know what to look out for, there will be somebody that will sit you down long to tell you what you need to know. That, will they charge you? Maybe, maybe not, but they would much rather invest that time to help you stay out of trouble, because once you get in trouble, it's going to cost you more. Instead of $200 or $300, it's going to cost you a couple grand to get out of trouble. So this is why I really wish people would seek out services of the tax professionals in the finance community, because that's what we're here for.
Yeah. So personally, do you offer like consulting services, or do you offer bookkeeping services? How exactly do you help home business owners with their taxes?
Yes, I offer consults. I have Facebook Lives. I have, I help with business structure, help with bookkeeping, just, the whole gamut to help you run a solid business. Mm-hmm. And, there might be some DIY stuff where you're like, look, I need to know what to do, but I can't afford to pay you. Okay, we'll put a package together that gives you some foundational stuff that you can do yourself. And then you need to come see me quarterly, right? Yeah. To make sure that you're on the right track. So there's a variety of options. And you know what? I'm very honest in that I am not the only game in town. But if you would approach someone and say, this is where I am, they're really more willing to work with you and help you figure it out.
Yeah, that's amazing. Yeah, and we've been hanging out for 20 minutes, and I'm just like, wow, I learned so much more about taxes than I did trying to, getting ready for this hangout. I also learned like small things here and there, doing small research. I'm like, well, what questions should I have with my time with LuSundra, right? Like, so yeah, I learned way more in the last 20 minutes than the last couple hours researching. So, so that's the power of having an expert, right? Like actually ask questions as opposed to typing into Google. So right. Yeah, no, that's my biggest takeaway really is outsource it, right? Like if you're not sure, outsource it, right? Like get a bookkeeping services, get a consult service, right? Get the services that you need. That's what I mean.
Yeah, absolutely. One of the things that is more prevalent now, of course, is the gig economy, right? Because especially with tax reform, employees who work from home are no longer able to deduct those expenses. And so more and more people are going back to their employer saying, excuse me, can you pay me as a self-employed contractor instead of on a W-2? But that means that you have to really shift your mindset and understand that you do have to pay taxes, and to focus on what you're gaining instead of what you're losing. I have a lot of people like, okay, I'm not reporting this income because I don't want to pay X amount to the government. Listen, the government is not going away. Taxes been around since Jesus. Okay. They're not going away. There are plenty of ways to legally avoid paying taxes than for you committing tax evasion. Tax evasion is when you don't report your income or you owe taxes and you just don't pay them. that's tax evasion, that's illegal. But there are lots of tax avoidance strategies that you can employ if you consult and build a relationship with professionals. So, so I was actually quoted on a site about, the gig economy. And what was funny is that millennials were the biggest offenders in not paying taxes.
Yeah.
like y'all trying to go to jail early.
In jail before 30.
In jail before 30. Forget the student loans, y'all going to jail.
Yeah.
But I believe that, the millennial generations, unfortunately, you're victims of bad information, right?
Yeah.
Because, and just as an example, I saw this commercial during tax time, and I forget which tax company it was, but it showed a dog walker, and it said, your shoes are tax deductible. I was like, no, it's not. Right? Like, y'all leading these people down the wrong path. It's not right. So it's just really being a victim of bad information, because you can find anything on the internet to support what you want. Doesn't mean that it's right. But if you Google enough, you'll find something to support what you want. And you really need to, because like I had this young person like, QuickBooks is your granddaddy's accounting system. I was like, baby, is your granddaddy rich? I just want to know, but, those kind of things are considered for older people. And really, it's for everybody. And it's, unfortunately, I'm getting a lot of people after they're in trouble and getting letters from the IRS. And that's when it's going to cost you more money.
Yeah. So again, right, like proactive still beats reactive.
Yep.
Right. In this case. Yeah. So yeah, no, you're right though. Like millennials, we went to school, we learned about this fancy thing called geometry, algebra, everything, but no one told us about taxes. Right. So
yeah. My son and I were actually having that conversation. It's like, so how exactly has Pythagorean theorem been beneficial in my life? I'm like, son, I just no, it just has not. Like, it has not worked out for me. Like, I survived it, but no, I don't see the use for it. But you got those, rocket scientists and things out there that, but yeah, that thing about taxes and understanding how our system really works. Yeah, it's just, unless you really express an interest or book a consult, no, you don't get it.
Yeah. And that's why it's even more important, to get educated about it. Because like you said, it's not going to go away. You could be a multi-millionaire, or you could be earning $10,000 a year. Taxes will still be there.
Yeah.
So,
And, and the other thing, about being in business, okay, our tax system really does favor businesses, okay, but it doesn't favor broke businesses.
Yeah.
Okay. So one of the things I tell people is like, the more money you make, the more you can take advantage of our tax system, right? Yeah. I had somebody send me a live broadcast that Grant Cardone did. Now, I love me some Grant Cardone, okay? Fabulous real estate dude, multi-billionaire, whatever he is.
Yeah.
But he was giving poor tax advice. And I was like, listen, the difference between Grant Cardone and you is he has attorneys and you do not.
Yeah.
So even though he was like, oh, my accountant says I need to keep these receipts, my Amex and MasterCard and Visa, those, like, no, you need the receipts, baby. That is what the IRS says. You need to be, your line item on your bank statements is not enough. So, I know the tax law says that anything under $75, you don't have to keep the receipt. But every tax person and CPA in America will tell you keep every piece of paper. I don't care if it's 75 cents, because it's easier for you to substantiate that expense when you have a receipt than when you don't.
Yeah. Your darn receipts.
Keep the darn receipts. I don't care if you scan them, take a picture, whatever you do, keep the darn receipt. If you can produce the paper, your life is good.
Yeah, that's awesome. That's awesome. So yeah, LuSundra, thank you so much. Before we head out, right, give us a quick parting piece of guidance here about, like aside from, give us a quick parting piece of guidance.
You know what? Making the decision to get into business is one of the best things that you can do. Okay. But the one thing I will tell you is that business is very easy to get into. However, when you get yourself in trouble, it is the hardest thing to get out of. So make a decision to reach out. If you don't have a tax professional with whatever country you're in, okay? If you don't have a tax professional, reach out to one this week. Make that your priority for the week. Is to reach out to one, because you want to know who to call before you need to call them. Okay?
Yeah.
So do that for yourself. And if you're in the US and you're like, I have no idea who to talk to, you can find me on Facebook, Home Biz Tax Lady. I'm on YouTube. I'm on Facebook mostly. Those are my two hangout spots. But don't just go flying blind.
Don't just go flying blind. I love that. Yeah. So yeah, I'm gonna hook up LuSundra's Facebook and YouTube. You said over in the show notes page, and guys, definitely reach out to her. And you're specializing in the USA. Okay.
Yes.
Yeah.
Yes,
okay.
in the U.S.
Yeah.
And, and even though the U.S. and Canada taxes are similar, I am not a Canadian tax person. I do have friends that are. So if you're in Canada and you don't know who to call me and we'll connect you with someone.
All right. Awesome. Well, thank you so much for your time, LuSundra. We really appreciate you imparting your knowledge here today. And like I said, guys, her contact info will be in the show notes. If you're watching from YouTube, it'll be in the description below. But if not, you can always head over to my podcast page, and you'll find LuSundra's episode in there, all with everything you'll need to know about LuSundra. All right, guys.
All right.
Well, that was so amazing. Okay, if there's anything I took away from this session with LuSundra, is that never be afraid to ask questions. Being proactive sure beats being reactive, right? Like you would think that what you don't know, right? Like you're sitting there and you're thinking that, okay, I got this, and then before you know it, you're in trouble with the CRA or with the IRS or whoever is looking after taxes in your own country. And again, do not be afraid to just reach out. Okay, there are people out there that are willing to help. Like people like LuSundra. Such an inspiring individual. She is so amazing. She's such an inspiring individual. And I hooked up her contact where you could contact her in the show notes page. Even if you're not from the USA, LuSundra will connect you with someone who will help you. And that's what I meant by she really, really does serve from the heart. Okay? Connect with LuSundra. Her contact info is on the show notes page. It's on judithvergara.com/94. So you could see where you could connect with LuSundra. And and guys, don't forget, before we hop out here, don't forget to join the Play Inspired podcast mastermind Facebook group, the private Facebook group there. It's on you could access it through judithvergara.com/mastermind. Inside that group, I give out trainings, entrepreneurship, mindset training, pretty much anything under the sun that you will need, right? And in there too, you'll get access to how you could get access to my short courses, right? In there, and you'll get plenty of freebies. I give out freebies in there all the time. So yeah, head over to judithvergara.com/mastermind to go access that private Play Inspired podcast mastermind. And guys, again, thank you so much for hanging out here with us today. Don't forget to subscribe, download, and review. the Play Inspired, leave a review for the Play Inspired podcast. And yeah, other than that, guys, you have an amazing day. Go out there, work hard, play hard, but most importantly, you go out there, you take massive inspired action. Go out there and go play inspired. Okay, all right, guys, we'll talk to you later.